2023 was a phenomenal year for US stocks, especially for Magnificent Seven. And 2024 is also on a great start. Yet, there is a huge market risk that almost no one is considering right now that could bring a sudden panic to the stock market and bring the entire stock market rally to an immediate collapse. What that risk could be is the central topic of this video. Nasdaq 100 rallied a whopping 55% in 2023, the best one-year performance since 1999, and a further 6% year-to-date. Here are some amazing stock performance data of the past year or so. NVIDIA rose 489%, Meta rose 434%, and Microsoft rose 92%. Up until the first half of 2023, most people have been expecting recession to arrive sometime soon. While stocks have rebounded quite strongly since the end of 2022, many people still worried that the rebound could be a dead cat bounce that could soon crash again as the economy finally faces a recession. Many others, however, began to turn optimistic, hoping we could actually achieve a soft landing. As late as the autumn of 2023, the market seemed mixed between both worried and hopeful, unable to firmly settle on either direction. Expecting a recession was absolutely reasonable, as we had seen one of the greatest and fastest rate hikes in financial market history. If companies and economy prospered during the years of 0% interest rates and an endless supply of money, it was logical that such a sudden spike in interest rates to over 5% and such an abrupt tightening of liquidity could bring some form of serious damage to the economy. So did recession come? Will it ever? No, not anymore, at least according to the current market sentiment. Based on major economic data and indicators that have been coming out, the US economy is on a tear. Labor market is so strong, with the number of jobs strongly resilient and the unemployment rate still at near perfect employment level. US GDP is also better than ever, with third quarter GDP recording nearly 5% growth, and fourth quarter data also hugely exceeding expectations at over 3%. Earnings for meta tech companies are trouncing anything that we have seen in the past, especially with the fresh round of AI mania created by the release of ChatGPT in late 2022. What is more, while economic data have been so strong, the inflation data, which was the culprit of the stock market rout of 2022, has come down tremendously. No one expected inflation to come down so much so quickly. Combining the two data points, we have the best of all worlds. The market is now seeing a perpetual realization of what seemed almost impossible just half a year ago: soft landing, or actually a perfect landing. The economic data seem to be pointing toward a perfect no landing scenario, not even a bit of economic contraction. Thus, recession worries have now become a thing of the past. It's now all about a perfect soft landing. Since the end of 2023 and into 2024, almost everyone is now bullish with the following expectations. US economy is performing tremendously and will continue to do so. Inflation has been completely stabilized. Fed will soon lower interest rates. AI will change the world. And stocks can now only go up. So at this point, what could possibly go wrong? What could happen that could perhaps pose an unexpected shock to the stock market? Shocks and surprises by definition come unexpected. As the degree of unexpectedness increases, the degree of the shock and surprise increases. So what is something the market is least expecting right now? It's inflation going back up. If inflation rises again to a non-minimal degree, the Fed will have to hike again instead of lowering. That is the exact opposite scenario of what the market is currently expecting. How can inflation go back up from here? In fact, it's already come down so much so quickly that almost no one is expecting it could rebound to a degree we are seeing in 2022. But naturally, we have already seen some important economic indicators pointing to a possibility of inflation rising again. First off, let's take a look at December 2023 CPI. 3.4% versus 3.2 expected and 3.1 a month prior. If the rise in December CPI was a one-off bounce and it goes down again in 2024, we could really be on path to a perfect soft landing. However, we are seeing some economic data that could be pointing to the watershed scenario of inflation rebounding significantly. Let's take a look at some economic data since December 2023 that have been shooting above the roof and trouncing market expectations. Non-farm payrolls rose 353,000 in January versus 184,000 expected, and 333,000 in December versus 170,000 expected. Retail sales rose 0.6% in January versus 0.4% expected, and rose 0.3% in December versus a contraction of 0.1% expected. Consumer sentiment recorded 79 in January versus 70 expected, and 69.7 in December versus 62 expected. Why are we seeing major economic data come out way better than expected by Wall Street analysts? It's because the consumer sentiment, and thus the people's ability to spend, is greatly affected by the overall market sentiment. Just think about how you felt financially as soon as the pandemic broke out in February 2020 versus how you felt as the Fed released massive money supply and every risk asset you can think of started going to the moon until the end of 2021. It is important to remember that our general sense of well-being financially is greatly affected by the overall stock market sentiment. Our sense of financial well-being is greatly diminished in times of negative concerns, but greatly increased in times of optimistic expectations. The stock market's reactions happen to precede the actual economic outcomes. With the meta-tech-led phenomenal stock rally continuing for more than a year now, we are starting to see better than expected economic results, contrary to how the market have been worrying. The strength of the economy is a great news, but when we look at the degree of their strength, especially in comparison to consensus expectations, we need to consider the potential for something else to also exceed our expectations. Inflation. Currently, we are all excited about the potential for a perfect soft landing because, as we have seen, the economic data are coming out so strong, while inflation has come down significantly from a peak of over 9% to just above 3% in a little over a year. But what if there are lagging effects we are not fully seeing currently? In fact, history has shown that inflation indeed lags and showing its teeth. As the economy lags the stock market movement, inflation lags the economy. That is why Chairman Powell made the major blunder in late 2021 by saying inflation was transitory. If you took into account the noticed market rally following the pandemic and the strength in the overall economy thereafter, he should have been more cautious in inflation outlook. Let's take a look at the movement of Nasdaq 100 against the US CPI. It seems the two display quite similar movements, but the CPI seems to show a bit of a lag. In fact, as is, the Nasdaq 100 and US CPI over the past 10 years has a correlation coefficient of 0.68, which is quite high. What if we draw the same chart but bring the CPI forward 9 months against Nasdaq 100? The movements almost mimic each other with a correlation coefficient of 0.89. Given one is 100% correlation, an 89% correlation can be considered extremely strong. Considering the correlation between Nasdaq 100 and S&P 500, which are both major US stock indices that include many of the same stocks, is 0.99 during the same period, a correlation of 0.89 between two completely different indicators is quite astonishing. What we can take away from this analysis is that CPI has lagged the movement of Nasdaq 100 by roughly 9 months with a very high correlation during the past year. And with the Nasdaq 100 having recorded a tremendous rally in the past 9 months, confession could now follow and rebound significantly. So, given that Nasdaq 100 has rallied extremely strongly in the past year, and that major economic indicators have begun coming out much better than expected recently, should we brace for inflation to also rebound much seriously than the market is currently expecting? Perhaps yes. If inflation does not rebound and the economy keeps on improving, there's nothing we could want more. But if it does indeed rebound significantly, that could perhaps be the worst thing that can happen to the market right now. Why? Why is inflation rebound being the worst possible risk for the market right now? Because almost the entirety of the US stock market rally of the past year is premised on the market's mere certain expectations that inflation will not rebound from here. If inflation rebounds from here, that premise will immediately evaporate, and the sudden pivot in market expectations to the possibility of even more rate hikes could bring about an enormous shock for investors. While we may be tempted to feel assured by Powell, who has pivoted earlier than expected and displayed confidence on the potential for soft landing, we must remember that Powell has made multiple mistakes in the past. Some major past blunders by Chairman Powell. Transitory inflation in late 2021, followed by serious inflation spike to over 9% by mid-2022. Soft landing confidence displayed in February 2023, followed immediately by bank panic with a sudden collapse at SVB and other regional banks. Despite Powell's extremely important and honorable role as the chairman of the Federal Reserve Board, he is also a human and thus prone to mistakes. And as a human being, he has a big ambition: to be remembered as the greatest Fed chairman in financial history. In that endeavor, Powell had been much more hawkish than the market expected during the high inflation period of 2022, because he knew the importance of stabilizing inflation, as he recognized the lessons learned through Volcker in the early 1980s. But right now, as the economy is faring much better than expected, even with more than 5% rate hikes, and as inflation has come down much faster than expected, Powell is beginning to feel that he may really pull through perhaps the most astonishing soft landing in financial market history. With such confidence rising, Powell has pivoted earlier than expected by the market, cementing a widespread market expectation that soft landing could really come true. If Powell turns out right, he will be a hero to be remembered forever. If not, he will follow the steps of past that chairman in having to deal with recovering from a recession. And with that in mind, let us close this video by acknowledging the 3 possible outcomes. 1. If inflation does not rebound and a perfect soft landing really is the ultimate outcome, Powell has made his dream come true and is truly worthy of being remembered as the greatest Fed chairman in financial history. However, 2. If inflation rebounds quite seriously following the recent nominal strength in stocks and the economy, Powell will likely abandon any further attempt to achieve a soft landing and pivot back to Volcker-style extreme hawkishness until a hard limit ensures that inflation has no room for rebound. This is probably the worst case possible, as this means what the Fed has done up to now turned out to be a huge blunder that just delayed and worsened the job it has to do to handle the economic landing. And 3. If inflation does not rebound, but instead of soft landing, the economy starts tanking, with the lightning effects of more than 5% rate hikes belatedly taking a toll. The Fed could slash rates much faster and more aggressively than expected, or the market could fall significantly as soft landing has failed. This case is likely much better than the prior case where inflation rebounds, as the Fed can focus on taming the immediate recession by slashing rates and easing money supply, but some form of market correction will likely follow. So while we hope for a perfect soft landing, let's be aware of the biggest risk that we are currently facing and be ready for any unexpected shock. Please subscribe and like this video if you like the content, and please share your own market views in the comments below. I would love to hear all of your opinions, whether you agree or disagree. We all gain through the wisdom of others. May the returns be with you.